Today we're going to be looking at options. Should you be buying options, and who should be buying options? Well, first let's talk about what are options. Options are contracts that give you the option but not the obligation to buy or short a particular security. Like for instance, let's say I want to be able to buy Apple stock at a particular price in the future. Maybe I want to buy it where it is at the moment, but I don't want to buy it now. I want to be able to buy it at the current price, but I want to buy it 6 months from now, even if the price goes up higher. Well, I can actually buy something called an option, which will actually allow me to actually continue to buy the current price of Apple. Even if it went up 50%, I still will be able to buy Apple stock at the current price. Now, of course, you do have to pay a premium in order to buy these contracts. But one benefit of it is that it actually allows you to buy a lot more. It actually allows you to have a much greater position in a particular stock than you would if you were to buy it with cash. Like for instance, to have the option of buying like $100,000 worth of stock, I think you might only need to put it, I think that would be the equivalent of $3,000 to $6,000 if I'm not mistaken. So it shows you the kind of leverage that's there, but at the same time it's pretty safe in the sense that yes, your options could decline to worthless, but no matter which direction it goes, you will not lose more than 100% of your money. Now, as an example, if you go on margin buying or shorting, you could lose a lot more than you actually put in. Now, whenever you're shorting something, you always are putting yourself at more than 100% risk, because no matter if the stock actually goes up dramatically, you actually will be losing more than you had put in to short the stock. Now, so what kind of people should be buying options? One reason to use options is a way of actually securing your portfolio. As an example, if you want to ensure that you will not get hurt if the stock market drops like 20 to 30%, you can buy S&P put options, which will rise substantially in value if the market declines dramatically. Now, if the market doesn't decline, yes, these will decline and go down in value, but that's not the point. The point is it's insurance. It's an insurance against a bad event. What do you think of that as portfolio insurance?
I think you need insurance.
Well, insurance is a good thing. So if a lot of people on YouTube, for instance,
think of what Talib did with his portfolio.
Oh yes, Talib's portfolio, the one he advises, didn't go. How much did it go up? 5,000%,
4,700%.
Yeah. So what it shows is if you're prepared for a highly unusual event with these options, you will make a lot of money. And the thing is to not really time it. The truth is, someone like him, he always has the options in case the extreme event happens. And basically, not only does it protect his portfolio, but he's actually able to exceed basically the return. Now, he basically makes fun of the idea that you have to get the best return year over year, because he said that's kind of a fake way of evaluating how good your results should be long term. But that's another issue. So anyway, what you need the options for are two different things. You can have it to protect your portfolio, which is a very good thing, but you can also use it to speculate on stocks with a lot less capital as well. Especially if you do what's called earnings roulette, where you think that stock is highly likely to move one way or another. You could buy options, and I think I did this once with a stock called Cree. I don't know if you heard of it. They make the new LED bulbs. So I actually bought put options a few years ago on this stock called Cree, because I just thought the earnings would be bad, and it was. I think it was down like 15 or 20% on the after hours, and I forgot what it did the next day. Maybe the put options were up more than 100%, maybe 100 to 200%. So that shows you that the extreme move in the stock will cause the put options, which are bearish options, to rise substantially in value. And a lot of people reason why people like options is the volatility. You're not going to get dramatic volatility with a lot of stocks. They just don't move up in the same dramatic level that options do. Oh, here are the dogs that they're always opposed to volatility. Okay. So they are opposed to volatility. A lot of these dogs are opposed to volatility. What's very important to keep in mind when it comes down to options, the reason why people like them is that they like the fact that they move dramatically in price. That's really one of the most important things about these kinds of options. Oh, that's chicken. So one of the reasons why people like these kinds of put options is just because they want to actually have things that go up substantially in value, whereas if you own a stock, it's not likely to, unless it's penny stocks, it just aren't the type of thing that go up dramatically and at a very fast pace. Of course, the problem with options is that oftentimes most of them do expire 100% worthless. Now another problem with options is you'll find a lot of people on YouTube or on Twitter, they're complete con artists, and they're always wanting to say, oh, this week I made 200% with my options, and they're asking you to subscribe for their chat room and stuff like that. And the truth is, I've seen this over and over again. These people are always saying they're making 200% like every Friday or something like that on Twitter, just trying to get more customers. And the truth is, you have to be very skeptical of this, because most option traders, if you're a smart option trader, you do it very infrequently. It's not something you do very often, because stocks don't usually have wild swings too often, and if you play with options too long, you're going to get burned. So it's really, I think the fact is that people know the noobs are excited by these kinds of returns, so they're definitely going to fall for it. And it's an unfortunate thing that the con artists, they know that these kinds of things have worked throughout history. So be very skeptical of the con artists trying to sell option strategies that make a quick 200% or so, because it just is not likely to happen. So one strategy that I would not ever recommend doing, though, is selling options to people. While buying options gives you limited risk, when you sell options, when you open a business and to sell options, you are actually taking on unlimited risk, because the option could go an unlimited amount up. It could go up 1,000, 100,000%, depending on basically what kind of option you're selling. So it's always important to take that into consideration. No matter how smart you are, you're not likely to be smart enough to realize how risky of a move it is to actually sell options. So I would never sell options, especially because it could just go up an unlimited amount. And there are all kinds of stories on the internet, people who have gone bankrupt doing that, because it's just a huge mistake. Now, buying options makes sense though if you think there's going to be a market crash, and I know everybody always thinks there's going to be a market crash on YouTube, but if you really honestly believe that's going to happen, then you can buy S&P puts, and they will go up in value if there is a crash. Now you should never trust someone on the internet that's giving advice, so just this is entertainment purpose only. But yeah, I think that what my new strategy with options will be at some point is I will just always have S&P puts. It helps to protect the portfolio. Yeah, it probably takes off a few percentage points per year that you otherwise would get, but the benefit is you can sleep at night from knowing that if there is a crash, you're going to be protected. Now, I also think that for a lot of people, they're tempted to be dip buyers on a few of these stocks that have gone down a lot, you know, like Hertz Rent-A-Car or Hilton and American Airlines, Delta Airlines, basically all the airlines. They've gone down a lot, so some people are tempted. They're saying, hey, wouldn't this be great to actually buy this stock cheap? Well, if you really think that it's going to go up fast, you could buy options, so that way you're not really taking a full position on it. You're just using options, which uses a lot less of your capital. Although I would not really consider any of those stocks and necessarily buys, so that's something to keep in mind. So maybe I should actually explain options even more thoroughly. What are options? They're contracts you're buying. They're not the actual equities. And the contract states exactly what price you could buy or short this particular equity. So if you wanna go long, if you want to buy a bullish position, it's called calls. That gives you the right to buy it at the strike price. If you want to actually have the right to short the stock, then you buy the puts. And all of them say exactly when the contract expires. You can find out all that information online. They change obviously by the second when the stock market is open. So that's something for you to keep in mind when you're looking at interesting options for yourself. So that's it for today, and definitely hit the notification bell, subscribe, smash that like button, and see you in another video.